This is our Forex blog for May 3rd, 2011. And like most days, what we really want to do is find a currency that's very strong and trade it against one of the weaker ones. The dollar and the yen were both weak on a weekly and monthly basis. The yen's weekly trend shifted up, and the daily trend was up as of yesterday. Extreme strength there in the yen. In a perfect world, you want real-time strength with the daily, weekly, monthly trend also up, and trading that against one of the weaker ones. Today, the pound's been very weak. Daily, weekly, monthly trend was down. The Swiss was very strong. So you could have, looked for sells in the pound Swiss, buys in the euro pound. Buy the strong versus the weak, sell the weak versus the strong. The dollar and the yen were both strong, but the daily and weekly trend were stronger on the yen. So, some of the best trades today were selling the weak pound against the strong yen. Here's the pound yen, and you can see even last night it was below the hourly moving average, which means it's more likely to go down. One of our systems is anytime you have an NR7 pattern on a 4-hour chart, when it breaks down, you want to go short there. It fell from 135 all the way to 133. That's a 200 pip move. And even if you don't catch the whole 200 pips, when it came down here and kind of reversed, you might have got out with 60 or 70 pips, and then went short again here and wrote it down. The trend intensity pro, anytime this hits minus 20, usually those trends continue, so you might have gotten short here and made 20 pips, got short here and made 10, got short here and made 150 because it just kept going and going. Let's review the new tools that we just released: FX tipping point and FX momentum. Force equals mass times velocity. The mass of the market is the tipping point. It's basically how many of them are going up or down. If you short the pound yen, you want the euro pound going up, which means the pound's weak. You want the pound dollar going down, pound Swiss going down, pound yen, and so forth. And the velocity of the market compared to the past is the momentum pro. So when you add both of these to your chart, you get a lot of information that you wouldn't normally have. If you sold right here, for instance, notice on that one bar, almost every single pound pair went down and yen pair got stronger, and it did so with about 150% of normal volatility for that time of the day. And even notice a little bit before, extreme force to the downside when both of these are at or above the dotted white line. So you even had a 30-minute head start of the potential of the down move. And notice as it's going sideways right here, with the exception of one bar with a very high percentage of pound pairs going up, yen pairs going down, but with almost no momentum, half the momentum of normal for that time of the day. When it broke down right here, very good short. And notice it came down and both the mass and velocity kind of slowed, and that was the end of the move. Let's look at the move a little bit later when it started to fall right here. Notice the tipping point was all red. Some massive volatility to the downside came in right here, even before the drop, 20 minutes before the drop, and boom, it took off. Mass times velocity down, it goes sideways here. Sometimes when velocity of the markets increases, you do get a pullback bar that has a lot of momentum, and all that means is you want to tighten your stop. So in this case, you get short right there, maybe with your stop above the high here, and when it went down and came back up with decent volatility, you want to put your stop above either a break even or above this little sideways range. And as it goes sideways, there's no volatility to the upside, and then it drops down again. Again, mass and velocity both at extreme levels, and most of the time, especially when the market's underneath the lower containment band, you want to draw your fibs on there, and it's usually going to stop at the first or second fib target. In this case, it shot right through the first, right through the second, so any indication of this starting to go back up, you want to get out. So you might have got out right here around 60. You're short this up here around 40 for a massive 80 pip profit. And usually it's very risky to sell underneath the lower containment band, but the pound was the weakest pair today. If you see it go up in upwards volatility kind of slow down a little bit, you can take a stab at maybe selling it right here, and a very high percentage of them are going down with decent volatility. You start to move your stop down, and if you don't see extreme strength or in this case weakness come in, just keep tightening your stop. But you can take riskier trades now with these new tools because you have real time up to the second stats on what's going on in the market bar by bar. And so you would have got out of your trade here because it's not, when it's this far underneath the lower containment band, it's more likely to reverse and go up. I wouldn't recommend buying the weakest of all the pairs, but let's look at some other examples today. The dollar also very strong right here. Let's look at the euro pound. Very strong euro, very weak pound. Currency meter obviously had you into this trade. Let's get rid of some of the tools and add the new tipping point and FX tipping point and momentum pro. So notice price is above the hourly, and for the most part the majority of up moves have much more higher percentage of euro pairs going up, pound pairs going down than the down bars. You know, it's very predictive in that way. And on most of the bars to the upside, with the exception of this one bar right here, it wasn't a broad-based move down, but one of the pairs moved a lot during this normally less than high volatility time. So the market's kind of chopping around. It's above the hourly or the previous day's high, pulls back. Anytime you have a multi-hour pullback where it doesn't really break the lows and then it breaks out, it's usually a pretty high probability trade. You know, anything longer than an hour, 2 hours is better. It broke out right here, you might have went long. And at first, on the first bar, you're not too excited about this. It doesn't really appear to be working, but you have a very tight 6-7 pip stop. All right, it's going up. Very low participation, but the ones that are moving up at a decent volatility level. All right, and whenever you see at or above the white line on both of these, or very close to it, that's a trend that's very likely to continue. So it's pretty likely at this point to break through the high in the next bar or two. And there it goes. And you can see almost every single euro pair went up and pound pair went down. There might have been one pair stronger than the euro, but you know, anything over 0.6 is extreme strength. So this is saying pretty much that all the euro pairs went up, pound pairs went down, and they did so more at a greater clip than 3 times normal volatility. But it is above the upper containment band at monthly pivot level, weekly pivot level, and you're up a lot of pips in this. Up 40 pips in the euro pound is a lot. So I'd exit half the trade there. Usually after a big bar like that, it goes sideways for a bar or two. All right, so it slightly went up. That's rare, and that's a very strong sign of strength after a big bar like that. But the next bar could pull back because of such a huge move up on one bar. All right, slowly going up. You can see the percentage of the ones going up is going down, and the more of them went down, distance-wise than up, but a higher percentage of them are up than down. Sometimes that happens. Usually you want to tighten your stop underneath the previous bar's low. It's still going up, so you stick with it. All right, again, a lot of volatility is coming in here. We're out of half our trade, but we're still in the other half. And I'd probably exit the other half right here because it's way above the upper containment band, counter trend sell signal, which we'll see in the future if that was the end of the move. Pretty much the end of the move. There's not much else going on. It's up statistically too much, and there we go. Counter trend sell signals, you don't have to take a counter trend trade in it, but you should at least be aware that possibly the up move is over because it's gone up statistically too far, and get out of the trade.